Hey folks, thought it'd be fun to give you a full portfolio update on my corporate investment account that is now worth over $100,000, and I think this is more relatable to the average investor because I only started this account last May in a ditch effort to basically find every loophole to avoid paying as much taxes as humanly possible and perpetuate my passive income from my business into the future so one day I can retire early. But I want to talk about one specific position in this portfolio as well after we review it, and obviously that is Alibaba, because I'm implementing a strategy that has worked so successfully in the past when we're talking about trend investing and has led me to outperform the likes of Cathie Wood and the general markets by leaps and bounds. And if that is a conversation you can appreciate, because it is a rarity that I find trend stocks worth investing in, consider hitting that like button, folks. But to kind of give you guys some insight, most people are unaware that there is such a thing called a corporate investment account. And the reason that I opened this was because I discovered for my business that the corporate tax rate in Ontario is 13% for provincial and federal combined on the first $500,000 made. Think about that. In my personal income, guys, once you hit that 50K a year income, your bracket's now 30 to 40%. So the amount of money I'm saving and then having the option to invest it through the corporation is going to make me an absurd amount of tax deferred and really low taxable income over the next 5 to 10 years as I continue to scale out this corporate account. Now, currently, this account's worth $102,960, guys. We are up currently on the whole account about 4.15%, which is pretty abysmal considering it's almost been its first year in this idea of kind of getting growth out of it. And basically, though, you got to keep in mind, guys, that I've been buying these over the last year. We had a peak of about a 20% gain, obviously on paper, and then the sell-off hit in 2022 here that none of us could really avoid. But putting it in perspective, since the end of May when this account opened up, guys, the S&P 500 is only up 6.69%. So we are definitely at par with those returns, not talking about the dividend side of it. You'll notice that I've got about $9,000 in cash sitting in this account. Now I'm pulling that cash out. I'm not going to invest it because I still have my corporate tax year ends in May. You don't pay taxes on corporations the same time you do on the personal income side of things. So I want to leave a lot of tax room so I end up with more money. It's better to have some bleed room when we're talking about paying the government. So let's get into this by first and foremost talking about the dividend side of the portfolio. Now, I'm focused on the Canadian economy here because I trust the Canadian economy for growth and stability over the US economy right now. That's boded very well into my favor, but I don't want this to be a dividend-focused account. Primarily, if you get into a corporation, guys, you're going to be paying a lot more in bank fees you're not going to be able to avoid. You're going to be paying a lot more to an accountant than you're going to be able to avoid. And to kind of make some up for some of those losses and just the general cost of this, I figured if I can get $100 a month or $1,200 annually in dividends, it would really mitigate a lot of those personal costs. So that's what I did with Enbridge, Royal Bank, and Algonquin Power. Over time, I may continue to add some dividend stocks, but the real focus is going to be primarily on the US side of this account. And let's just go through these real quick, starting with Facebook, guys. You got to keep in mind that when I started this account, I already owned Facebook at a phenomenal price of under $200 a share, but I had to sell it and I wanted the growth positions in this account to perpetuate tax-deduced gains, income, etc. So I moved it over, and my average buy price is much, much different in here. So the realized gain and loss might not be as calculated correctly, but I bought back in just under $300 a share. And today, obviously getting slaughtered on this position, down 27%. But keep in mind, if this thing can even go up $50, guys, we are going to be back into the green based off the other positions that are doing phenomenal. And let's talk about those first and foremost with Tesla here. Tesla is a company I've been in since 2019. I made a huge amount of gains. I sold out of those gains to diversify into things like J&J, Pepsi, and it really helped stabilize the portfolio, at which I bought the stock back, moving the position around in the corporate account, where I still have an average buy price of under $700 a share, which is just phenomenal here, right? And recently, I even sold a little bit more of it down to kind of get rid of the volatility aspect of the portfolio, because Tesla was like the largest position once upon a time, and I figured, I'll take that capital, reinvest it into another growth position, and that's what I did with Alibaba. So let's talk about Baba stock, because Tesla is going to be one of these companies for my corporate growth rate. I'm looking 5-10 years out. In the midterm here, I don't know what it's going to do. I just know it's going to be one hell of a volatile ride. But Baba is probably one of these strategies that I come back to that has related me to my highest rate of return gains. Tesla was once one of these trend investments that I kind of discovered. Same with MindMed, Canopy Growth Corp. And why do I think BABA falls into the suit of trend investing? Well, because like I said, guys, over the last year, BABA has just been one of these stories of a falling knife. And whether you've been listening to general YouTubers like Everything Money, Joseph Carlson, they kind of just keep telling you to buy the dip. People like Charlie Munger, buy the dip, buy the dip. This is going to be fine. Meanwhile, most of Wall Street was saying China is uninvestable. Jack Ma has kind of disappeared. They're really coming down with regulation issues. You just can't touch this. Even Kevin O'Leary was saying that once upon a time. And honestly, when I was watching this falling knife, you'd say, well, how do you know when the trend has really shifted? Because obviously back in October, the stock jumped 20 or 30%. Maybe people saw that as their opportunity to get in, but I really wasn't feeling the vibe. And I've been sitting on this forever, as you guys know. But over the last week, this stock has jumped up massively, like a 50% bump up from a low of $75 a share. So what caused this? The same thing that caused the massive rally in the March of 2020 crash in the US, guys. And that is the Chinese Communist Party becoming accommodative to their stock market, saying we want investors to be able to invest in our economy. So we need to fix this. We need to forefront this problem. And that eases a lot of the concerns and the uncertainty surrounding governmental issues. Now, BABA, everybody knows, has been by far one of the most discounted growth stocks in the e-commerce financial sector. Hell, Ant Group, even though their IPO got blocked, is partnering with the Communist Party to work on financial systems. So even though it's not public, it's still going to be a massive revenue generating business. So BABA to me is better than Amazon. It's better than most of the US large caps when you're talking about growth versus cost of getting that growth here, guys. So basically, when the Chinese Communist Party did a 180 at that very same moment, guys, during that massive sell-off to the $75 range, we saw the likes of Kevin O'Leary buying it. We recently even saw Ray Dalio put out this incredible changing of world order video, which kind of hinted, didn't directly say, but really hinted that China's going to have the real capability of taking over the world reserve currency. We know Ray Dalio has been a huge proponent of Alibaba stock, and he has been buying into it relatively aggressively. And then all of a sudden, all of the stars aligned for me, and it hit me like a bag of bricks when Alibaba jumped back up to from 75 to 90 a share. I saw all this media shifting from uninvestable to the most investable place to get cheap aspects to the best growth probably on the planet. And boom, like a bag of bricks, guys, the trend became your friend. It immediately shifted, and that's when I couldn't take another breath. That morning, I started buying Alibaba at $92 a share. Between $89 and $94 is where I really started adding the vast majority of this position. And again, we're not talking about huge positions. My overall portfolio is close to 400,000 now. And a lot of people be like, oh, well, why don't you leverage money if you're that confident in the position? Well, obviously, guys, I'm not a proponent of debt. I think that is stupid. I did it once. I don't like doing it because then it implies other people to do it. So personally, I'm just trying to do this as strategically as possible. And at the weightings of all my growth positions, I think, having 10,000 US in it with 8,000 invested, already up 26%. I think I'm showing people that there's real capability behind this. And I'm honestly stating, because the trend has shifted so drastically, BABA's probably going to have no problem over the coming months running up to potentially $150 plus a share, because it just sold off way too much here, guys. Now, I'm obviously making some speculations into the future, whether this trend truly has shifted and could offer those kind of crazy returns. But I think this is the easiest place, from my understanding, to invest a lot of money today, even at the current price, to get some really good growth into the future. And that is starting to prove very well in a short period of time. I've done this, guys, with things like MindMed when I saw the psychedelic trend coming. I did this with Canopy Growth Corp when the legalization was coming, and I bought that stock well before legalization hit in 2018, made a fortune. Tesla in 2019 was a clear trend people were missing out on. Sometimes when the stars align, and not only do you get great valuation metrics, but now you get all the biggest investors buying the stock. And let's talk about the biggest investors here, because obviously we were joking about this. A lot of people kept saying China was uninvestable, like Kevin O'Leary, but look at what they're doing, not what they're saying in the past. And if we take a look, guys, outside of SoftBank being the largest shareholder, Joseph Tsai, I don't know who that is, Jack Ma still one of the largest shareholders. Next to Jack Ma is Goldman Sachs, for crying out loud. And basically they own 1.46% of Alibaba as of Q1 2022, worth $4.7 billion. Forget Kevin O'Leary, forget Charlie Munger, forget Ray Dalio. If Goldman Sachs is willing to dump so much money into this company that they're now the fourth largest shareholder, I think you can get the underlying presence that there is some real value going on here. So like I said, guys, I don't know what the future looks like, but based off my past strategies, and there's a very few rarities where I'm able to do full-on trend investments, they tend to work out 99% of the, well, maybe 90% of the time, because there were a few that didn't work out. And obviously, like SRAC Momentous, which was a satellite space company, that trend didn't work into my favor. But what I'm good at is cutting losses early when I realize the trend isn't working. So I am by no means going to be selling Alibaba. I think this could be a very long-term trend for me, because it's going to be one of these continued pushes of incredible revenue growth from a price where I paid that I think is honestly absurd. So I think this thing could easily run to $150 to $200 a share from here. How long? Nobody knows, but that's what's going to make me and my corporate account continue to outperform the markets. Haven't been a year yet, but we've got until May to do a full year-end review. If that's something you appreciate, something you want updates toward, consider subscribing. Let me know what you think in that comment section below. But stay cool, stay awesome, and as always, I look forward to catching you in the next one.